Hello and welcome. You tune in to Rush Hour. Well, a day before the union budget, the economic survey was tabled in the parliament today. The survey pegs India's growth rate at 6.3% to 6.8% in the next fiscal year, largely to be driven by the domestic levers. This estimate is a downward revision from the previous range. Now, the report also highlighted the need for economic freedom and deregulation at the grassroots levels. It includes an increased investment share to 35% of the GDP from the current 31%, ramp up indigenous manufacturing capacities and scale up the future-ready infrastructure and improve the education quality to aid better literacy in the nation. Among global factors to watch are, the survey points towards the strengthening of the US dollar and the Fed monetary policy. But to weigh in on the survey and what it means right before the budget that will be tabled tomorrow, Debashish Mishra, who's the partner and chief growth officer, Deloitte South Asia, is joining us now. Hi, Debashish. Thank you so much for joining us today.
Thank you for having me over.
Debashish, we got the numbers for the as far as the real GDP is concerned for FY26. It came in at around 6.2 to 6.8%, which is pretty much in line with the expectations. We were expecting it to be below 7% anyways, and the IMF had also was also working with a 6.5% projection. Right before the budget, firstly, how are you reading into the survey? What were the highlights for you? And as far as the GDP is concerned, the numbers are concerned, are you expecting the numbers to be towards the lower end of the range, or do you see an acceleration going ahead, perhaps in the second half of the year?
So I think the first half was around 6%. So with acceleration only, I think it will reach 6.4, 6.5, which is the middle of the range, which is given in the survey. And, the primarily, every quarter, every successive quarter in FY25, we have seen a downward revision of the growth numbers. Probably it will settle around 6.6, 6.4, 6.5% is what the survey is indicating, and I think the street is also expecting that. So.
Right. Also, Debashish, do tell us what are the key highlights? What really stood out for you from the economic survey?
So what stood out is I think they have rightly pointed out the tough macro situation that, one is the investment, particularly the overall investment. It needs to be 35% of the GDP, which is probably, hovering less than 30% now. And it is being held up primarily by the government spending in Capex. And for last, many quarters, one is expecting that the private Capex will pick up, and that hasn't picked up to the extent that one has been expecting. And given the global headwind, the FDI numbers are also, at all kind of recent all-time low. So both on the investment side and on the consumption side also, although the rural consumption is picking up and it really is a good sign. But what is happening is the credit offtake also has to increase. And currently it is, I think, 10, 11%. And that growth and that has to reach around 18, 20%, which is around, it has to be around 1.5 times the nominal GDP. So the highlight is primarily that the inflation, and the survey expects that the Rabi crop is going to be good. So the inflation is going to cool down further, and particularly the food price inflation, and inflation is going to trend towards 4.2%. But for me, the highlight is, as you mentioned in your opening remark also, it's mentioning about ease of doing business 2.0 and deregulation. So we hope to see some of those things in the budget tomorrow.
Right, Debashish, you very rightly mentioned that the investment cycle has been a bit of a problem, whether it is the government capex or the private, investments that have remained rather tepid over the last year, if you will. What are you expecting in terms of capex from the FM tomorrow, as far as the budget is concerned?
So my point is that, already at 11 lakh crores, what was provided in the current budget, I don't think there is fiscal headroom with the expectation that the fiscal deficit will be reined in below 4.5%, and that being the case, and the system's ability to absorb more government capex is limited. So, as the survey is pointing out, there should be more PPP and private participation both in infrastructure and in other sectors. So there should be, provision to improve capex from private sector. And the survey also mentioned about MSME and other sectors. But one other thing it's clearly pointing out is India's problem of not investing enough in R&D. To give an example, I think China spends around 2.7% of its GDP in R&D, whereas India it's less than 0.7%. So clearly, if you have manufacturing ambition, product ambition, then we need to spend much more. And I would expect the budget to incentivize corporate India to spend much more money in R&D.
All right. Also, Debashish, another important thing that everyone perhaps has been watching out for, and it's something that it probably is due because of the slowdown in the economy. To give a boost to really move the needle now, the money has to be in the hands of the people, or there has to be more discretionary income as far as the general public is concerned. Income tax slabs and income tax rates, raising standard deduction under the new income tax regime to erase consumption, with the help of disposable income in hands of the common man. That's something that everyone has been watching out for. What is your take? What is the sense that you are getting from tomorrow's budget? What is going to be the likely take on as far as personal taxes are concerned?
So I think that as everybody is expecting, I think, and I think the Prime Minister also has hinted that Goddess Lakshmi will be kind to the poor and the middle class. So that's definitely, pointing out at, I think, some tax relief for middle class tax paying population. And also one interesting trend is the personal income tax has consistently now exceeding the corporate taxes. So in the short term, I think, as you rightly said, more credit offtake and some concession in tax will put more money in the pockets of the consumer to spend and boost that on the consumption side. But the structural issue of more jobs to be created in non-agriculture sector, which is manufacturing and services, remains a big challenge. The survey pointed out that almost 78 lakhs jobs per year additionally needs to be created till 2030, which is actually the core of the challenge that we have to shift more people. Almost 45% people are population is now dependent on agriculture. We need to shift massive number of that population to services and manufacturing, and create new jobs in services and manufacturing, and that will only sustainably revive consumption.
Absolutely, point taken, Debashish. But on that note, we will have to let you go. Thank you so much for taking the time out and joining us. But with that, it's time for us to slip in a short break. Don't go anywhere. We'll be right back with more.